Jesse Clinton, growth really beat value last year, but value took the lead last month, overtook growth. Can it hold that lead through the rest of 2016?
I think so. I think so. It's an exciting year for value. You saw last year Warren Buffett's group of stocks down 15%, unheard of. This year you see the markets down 6%. You see the international markets down 9 to 10, small cap down 10. Warren Buffett stocks, those value stocks, those good old school stocks that do well in most markets, about flat for the year, and I think they have room to run.
All right, well, financial stocks have also been under pressure so far this year. Is it time to get back in them? Because a lot of people say is if you're going to have a bull market, it's got to be led by financials.
I like financials. I think it's deep value. You have to be patient. Balance sheets are very strong. There's a lot of headwinds because of some of the regulatory environment that we face, so that's certainly it's certainly a tough thing to detract from earnings. But I think there's opportunity there if you find the right ones and you stick with them.
All right, you mentioned headwinds, but you're also looking for what you call all-weather stocks. What are the characteristics of an all-weather stock?
Right. So last year you saw, everyone knows the names, right? These growth names, they took off.
FANG stocks. Not as good this year.
Certainly not as good this year. And I think people will start to look at these stocks and say, wait, is there an opportunity there? Some of these stocks have come down 50% in 2 months, and I think that's a trap. I think you have to be very careful of that. I think you really have to stick to these all-weather names, these names that don't necessarily need momentum, don't necessarily need a terrific economy. So I think with what we've seen with this low inflation, the continued growth in wages, I think you can continue to see a slow upturning market, but not for these momentum stocks. So if you jump back into these growth stocks, you really could face some trouble. I think you got to stay with these all-weather type names.
Well, you run a covered call strategy for a lot of your clients. It worked very well last year because it was a flat, churning market.
Right.
So this year we've seen a whole lot more volatility. Sharp move downward through the start of the year. Last week a sharp move up. Will a covered call strategy work in this environment?
It will. I think now, especially because what we do is we run this covered call strategy with value stocks, I think you got to be a little more careful where you write the calls. So perhaps you're writing them a little higher in terms of out of the money, so there's a little more room to run. I think when some of the better economic news comes out this year, it's going to benefit these all-weather names, these value names, and these growth names will not benefit from it. So I really think if the covered call is still working, it's still something to employ, but maybe start pushing those premiums or the out-of-the-money amount a little higher so you can have more room to run.
All right. Well, thanks a lot, Jesse Clinton.
Thank you.
Thank you for watching The Street.